Hey, what's going on, guys? It is Easy Weezy here, back with another video, and we have the S&P 500 here selling off pretty bad. It's starting to come up here just a little bit, about 10 to 15 handles right off the low, but as many of you may want to know, why exactly is the market selling off this bad? Well, in order to sort of look at this, you have to put it on a 10-day chart and then start seeing where it really started to sort of folder. Now, one of the things we could look at is Monday was a bid, and then Tuesday was pretty flat, and then around Wednesday we did see this gap down, and then it came back up, and then it sort of gapped down again, and then again, but didn't reach this level here. So that right there did create a little bit of weakness, and then here we could see a massive, a massive bid all the way up to 2878. So from this area right here, from about let's just say 2810, and then we bid about 60 to 70 points, and then what I actually did here is I kind of saw it, just trading here on low volume. And what I wanted to do is I wanted to see here if it would hit this level, and it actually did hit this level. Now, all the way from 2878 and then down to 51. That right there is around 20 handles, so that's 20 handles lower on the bid. And then we can see here it kind of pops back up, and then it goes down again. Now we've blown through this level here, and then it is just automatic selling here all the way down. So basically we're about 28 handles right off the bid, which is pretty big. So from the 78 all the way down to the, actually no, um, it's about 30 to 40 handles if I'm not mistaken. Yeah. So, and then we pop back up, but then we go even lower on the bid, and then it sort of just has a gradual increase around Wednesday. Now this is last week, okay, so it kind of has a gradual increase. It starts losing the steam. We fall below this key area, pop back up, and then we just start selling really, really bad. And we reach all the way down to 2813, and then we come right back up. And that was good, but we didn't reach above this 2840 level, and I think that's something that traders were really hoping for, but it just really could not sustain it. Now, where it starts getting really dangerous is where we come down again, we come up, we do reach this area, but not this area. um, I'm actually going to put some rectangles to show you what exactly I'm talking about. We just don't reach this area and where it exactly wanted to be. And therefore here we come down much lower and we start seriously selling, and this is where everything comes to a hell in a handbasket. So this is Friday, okay? Now we're on Monday. I mean, Friday was volatile enough for the Dow Jones and the S&P. So the S&P actually did slightly a little bit better. Um, when it opened here, it was a little bit lower, but came back up. But it just didn't have the steam that it really needed to. It didn't break any. It really just didn't break this 2830 level, and it was just too low for anything to really happen. So we start completely selling, like barely any green candlesticks, and you can see the volume here. We have 204,000 contracts traded, and then we just keep on selling and selling, and now this is where we're at. Now, I want you guys to take a look at this, okay? This is not how the S&P 500 trades at all. Usually, when the S&P 500 trades, you'll have at least like 1,000 here, and you could see that jump that it just did. You'll have like 1,000, 1,000, 1,000, and you'll have those you know, bids and ask sizes, but it just doesn't have it, which is really dangerous for the S&P because that's really not how it is supposed to trade. And we could we could also look at the Dow Jones. I mean, if you see this, this is pretty big. I mean, these spreads are five, like, you, I mean, you could just look at these and notice that, I mean, these are just awful spreads. Now, the VIX, which is probably the biggest indicator into all of this, and we could really see how this plays out and what exactly started unfolding. And the VIX has been sitting pretty nicely at around 11. Um, when it starts getting to about 13, people start panicking, and then it got up to 15. And then it came down, it reached, a good low of 12. People were fine, and then it came back here and it opened at 15. And then on Friday, it closed at 17. And now we're all the way up at 38. So that right there is a massive, massive increase. And you might ask, why exactly is this happening? Well, I could probably tell you why. One, it's treasuries. Treasuries have been the big thing lately. If you put it up to a yearly chart, treasuries have been falling like gangbusters. I mean, actually, let me pull up a 5-year to month. We could see here around 2016 we had a massive increase. Usually when treasuries go up, now these are treasury bond futures, so when treasuries go up, these will go down, and when treasuries go down, these will go up. So it's sort of like this opposite correlation and whatnot. And treasuries have just been falling because treasury bond futures have been falling because there really is just a massive increase in the market. When there's a massive increase in the market, treasuries are going to go up, but then treasury bond futures are going to go down. And it was starting to get really risky because the yields on these bonds were reaching really high levels. We're talking like, 2.5% all the way up to 2.8% in one day. And raising rates here is not good for the market whatsoever, and that happening had a massive impact here on the S&P and whatnot. Looking here at the Dow is down about 500 points. We're going to look here at the NASDAQ. The NASDAQ is, I mean, it has just croaked so much. Right now the NASDAQ is at around, let's see, what levels would we say this is at? October 30th. Now, I remember here when the NASDAQ was at around 5,700 and 5,600. If we reach below those levels here, we are going to be entering a bear market. Now, they say a bear market is 20%, a correction is 10%, and that right there, I mean, if we reach 5,100, that right there is at least 1,200 points on the NASDAQ. That is a lot, and as of right now, it is in a free fall. Not right now, it's not, you look at this chart and you think, okay, free fall. This was bound to happen someday. I mean, like I said in my not my previous video, but I said, there's no way that this can hold up. I mean, all of this and not coming down one bit. I think it should come down to around at the low of 5,100. Right here. Basically wiping out all of these gains. I mean, the NASDAQ has already wiped out back to October. And the S&P has wiped out all the way back to late October, and the Dow has wiped out all the way back to around October, and the Russell has wiped out the Russell is basically wiped out all the way back to, actually I need to extend this chart. if I can. Okay, so the Russell has only been open for not even a year, but basically the Russell is almost below. Um, it would have to drop another something how many points, but anyway, the Russell is back down to August levels, and I could think, and I'm pretty sure this right here could probably drop a hell of a lot lower if it needs to. That's about it, guys. Thank you so much for watching, and have a good day. If you are losing money, I I lost a good chunk today, but stay in there. It's gonna get better. You know, don't panic. As much as you want to sell, selling right here only adds to the fire. I'm not saying that because I have positions open and I don't want you to sell, but you know, just stay calm. Um, you know, look at the charts, see how it's all playing out. Look at the liquidity. As you can see, it's basically garbage. That's about it, guys. Thank you for watching. Peace out.